everyone. I'm Karina Mojica, and welcome back to another edition of Talk Mortgage to Me. Today, I've got the man, the myth, the legend himself back in the hot seat, Dustin Owen, founder and CEO of TLOP's Originator Coaching, and the creator and host of the Loan Officer podcast. Now, today's conversation actually comes from a real discussion we recently had with a seasoned professional, someone in his mid-50s making over $200,000 a year with an MBA. And despite all that success, he still had some of the most basic questions about mortgage financing, which just proves something we see all the time. Mortgages can be confusing, even for really smart people. So today I'm putting Dustin back on the spot to break down two simple but powerful questions. First, why does one bank have a different interest rate than another? And second, how do you actually find out what mortgage rates are today? So let's get into it. Dustin, talk mortgage to me.
Karina, I would love to talk mortgage to you and everyone else who's tuning in. What's going on, everyone? Dustin Owen here, and thanks for stopping back by to hang out with us. So typically, these Talk Mortgage to Me segments is me sitting down with one of my friends in the industry who is representing a particular mortgage company, and they're a top producer in their market. Today, we wanted to flip the script, and I'm actually going to take a conversation that I recently had with a friend of mine. And this friend is looking to buy $1 million+ property. This friend is easily 30 years into his profession, 30 years into adulthood, and he has an MBA, and he makes really good money. And the thought would be the questions he was asking should be questions I thought everyone else would know. But here's what I learned. These are questions that we as lenders and real estate agents take for granted, but that's because we do this for a living. Whether you are a nurse, a doctor, a school teacher, an attorney, or you're a business executive working in a different industry, we've come to recognize and realize that you don't do mortgages for a living. So you may have some questions that to us are very basic, but to you, they're extremely foreign. So we're going to tackle those two questions. And Karina, I'm going to start with, why is one bank showing a different interest rate than another bank? And at the end of the day, it's no different than, why would one airline have a cheaper flight than another airline? Why would one hotel have a cheaper or a more expensive room than another hotel? It comes down to, what is the expected profit margin? What is the cost to produce? What is your cost to acquire? And what's your business model? Like, what is the service that you're providing? There are certain banks and lenders out there that maybe don't offer the same services, but in exchange, the consumer gets a slightly lower interest rate. There are other companies out there that maybe their cost to acquire funds is slightly cheaper. And because their cost to acquire funds is cheaper, then that allows them to lend money at slightly less of a markup. You may get someone who they have offshored all of their support. So your file may very well be processed, underwritten, and funded out of a foreign country versus here stateside. And when they do that, they're able to cut costs and pass some of that cost savings onto the consumer. The way that cost savings gets passed on to the consumer is typically when rates or in fees. I tend to tell every home buyer that I talk to that there's no such thing as the cheapest interest rate, meaning whatever you find that can be super cheap, there's going to be someone else who can do it for cheaper. However, there are plenty of bad lenders and there are plenty of bad loans that the cheapest rate and the cheapest lender might not be the best experience. It might not be the best loan. Most of us are looking for the best loan. So when you're out shopping for a home and you need financing, you're looking for the best lender who can offer you the most competitive rates and fees, but more specifically, the right loan. Because there's nothing worse than getting the cheapest rate on the worst loan. That's not what's best for you long term when you're thinking about your financial needs, wants, and goals. Few people recognize and understand that there's no such thing as a one-size-fits-all mortgage. Mortgages must be tailor-made to match your financial needs, wants, and goals. A good lender knows this, and a good lender will do just that for you. But in a nutshell, why could one bank or one lender have a different interest rate than another? Well, it all comes down to business model, services provided, cost of funds, as well as how cheaply or how expensive they choose to manufacture, as well as how much they're trying to profit versus how much they're maybe willing to give up and cut into their profits. Now, Karina, your second question was, what was it again?
My second question, Dustin, was how do we determine what today's rate is?
And that is a loaded question. It's loaded because mortgage interest rates not only change daily, but they change multiple times per day. Most people don't know this, but a mortgage rate is nothing more than a bond. So just like stocks are traded daily, bonds are traded daily, and the price of stocks goes up and down, the price of bonds goes up and down. And when the price of a bond goes up, rates go down, which means when the price of bonds go down, rates go up. And that trading happens based on supply, demand, geopolitical events, inflation, etc. So there really is never one interest rate. A lot of people mistakenly think that mortgage interest rates are tied to the Fed funds rate. That's not the case. When we hear that the Federal Reserve is increasing or lowering their rate, all they're doing is setting monetary policy. But there's many times the Fed fund will go down in rate. However, mortgage rates went up that day. So mortgage rates change daily, and they change based on the daily trading of mortgage-backed securities. Mortgage-backed securities are bonds. And then when you look at interest rates in general, there's no such thing as like one rate, because there's about 28 different factors that go into a mortgage rate. We have things like, what is your loan to value? What is your debt to income ratio? What is your credit score? What is your loan size? What state, what county are you buying in? Is it a condo? Is it a townhome? Is it a single family home? Are you going to include property? Are you going to include property taxes and insurance into your payment, or are you going to exclude them? These are all factors that determine someone's interest rate. Do you need me to lock in your rate for 15 days, 30 days, or 60 days? The longer you lock in a rate, the more expensive it becomes. Are you paying points or are you not paying points? Are you getting a lender credit or are you not getting a lender credit? So as you can see, there truly is no such thing as a one-size-fits-all mortgage. Mortgages must be tailor-made to match your financial needs, wants, and goals. And more importantly, when you're looking at a mortgage rate and a mortgage program or a mortgage product, they too need to be tailor-made. For some people, you should take the highest rate possible and try to get the biggest lender credit. For other people, you should pay extra money at closing and try to drive down your interest rate because that may make sense for you in the long term. A 15-year fix comes with a lower interest rate than the 30, but not many people can afford a 15-year fixed payment. So it's a whole lot convoluted, and it's why every home buyer, as well as every realtor, needs a great, trusted, full-time professional loan originator that they can count on to be their source of information to help walk them through the process.
Wow, that was great. Thank you so much, Dio. I learned a lot right now. Make sure to subscribe, share this episode, and drop your questions in the comments below. And if you're looking to get connected with a trusted loan officer or real estate professional, just click the link in the description and fill out the quick form, and we'll personally connect you with a TLAP-approved professional in your area.
I'm Dustin Owen. She's Karina Mojica. You've just tuned in to Talk Mortgage to Me.